The holidays are supposed to be full of joy, but for a lot of taxpayers, this is the season when avoidable tax trouble quietly starts to creep in. Overspending, using the wrong card for gifts, picking up extra holiday gigs without planning for taxes, ignoring IRS letters because, man, I'll just deal with it in January. I'm gonna have me a good time in December. All of these decisions can snowball into painful problems by the spring. I'm your host, Deltrease Hart-Anderson, keeping the IRS out of your pocketbooks, wallets, and bank accounts. Welcome to this edition of Tax Problem Solved that I'm calling Holiday Spending, Hidden Tax Trouble, how to stay off of the IRS's naughty list. Let's get into it. So again, the holiday season, it is emotional for a lot of people for various reasons, right? Some people are giving, spending, celebrating, and trying to make memories. Some people are depressed. Their loss of loved ones, and Lord knows I've had my share over the recent years of that loss. So I get it. I can just write a book about the losses and what those losses mean, especially during the holiday times. But in the middle of whatever you're going through, whether it's a good time or it's a bad time, the IRS does not take big holiday breaks. And I'll say it like that because the IRS does take a little break, and we'll talk about that in a later episode. But December is one of the most dangerous months of the year for taxpayers, and most don't realize it. So I'm going to give you, in my opinion, a few reasons why. Number one, people start overspending when people get stressed or excited, either one, a good feeling or a bad feeling. They start to swipe the card, right? And they're spending money without thinking about it. It's emotional spending. And all of a sudden, what was supposed to be set aside for bills or taxes, that money is gone. Another thing, small business owners, not to pick on us a whole lot, but a lot of small business owners dip into their business bank accounts. This quote unquote, just this one time to buy personal gifts. But every time you do that, you're creating a tax mess and possibly taxable income. Another thing, during Christmas, during the holiday season, a lot of people pick up extra income. Uber, Instacart, might be catering, holiday pop-up shops, UPS hires more people, Amazon hires more people. So all this extra money that everyone is getting, no one is really setting aside money for taxes. You're making the money, but you're not thinking about the tax implications for having the extra income. Another thing is the letters that pile up. Now, the IRS is still sending letters in December, okay? People see a notice arrive the week before Christmas and they say, you know what? I'll deal with that after the holidays. I'm going to enjoy my Christmas. I'm going to enjoy my family or whatever, my family and friends. Meanwhile, the penalties and interest for that letter that you receive is piling up every single day. So I want to flesh this out a little bit more, and I want to talk about how to protect yourself before December turns into IRS stress next year. So let's walk through about 5 mistakes that I see every single year. I see it in my practice. It's like clockwork. Some of these things I know based off of the letters I see, I know what's going to happen later. But we're going to go through some common holiday tax mistakes. So the first mistake, treating that business bank account like a holiday fund. Your business bank account is not a Santa Claus bank account. You're not Santa Claus. Your business, unless you're in the business of being a Santa Claus, that business bank account is not Santa Claus, is not the workshop, is not the reindeer delivering the gifts. It's none of that. So if you are using your business money to buy personal gifts, even little gifts that are not business related, you're creating a nightmare. You're creating a bookkeeping nightmare. If you're an LLC, you are piercing your corporate veil. And when tax season comes around, now you have to explain every questionable charge to your bookkeeper, to your tax preparer. And if you ever get audited by the IRS, you got to explain it to them too. By the way, the IRS calls this commingling of funds, and that is a red flag to them. So any personal spending using business funds is considered a distribution in whatever way. I don't care what business structure you have, but it's a distribution, and that distribution can be taxable depending on your business structure. And even worse, if you can't substantiate that business expense because it's commingled with holiday shopping, the IRS is going to disallow the deduction altogether and could start looking at your other legit expenses. You don't want them problems, okay? Another mistake that I see is forgetting to set aside taxes for the extra income that you earn during the holiday season. So if you are delivering packages, driving for Uber, selling gift baskets, wrapping gifts, doing home decor, all the little side hustles that the holidays bring, guess what? The IRS cares nothing about how small you think that income is. If you make $400 or more in self-employed income, you have to file a tax return, and you owe self-employment taxes on top of that income. Now, here's the thing, and I'm going to say the net income because you probably will have expenses for most of it, unless you're getting a W-2. So if you're out here in these streets and you making money moves, extra money, but you're spending every dollar that you make, you're setting yourself up for trouble. Something else that I see, mishandling employee bonuses. So a lot of you get bonuses during the Christmas holidays. If you're a business owner and you give employees cash or gift cards for the holidays, guess what? Those are taxable wages, period. You don't see it a lot, but if you're ever caught, that's pretty much the rule. Even if it's a $10 Starbucks gift card, you're supposed to run it through payroll. I know it's petty, but that's the rule. You decide where you find that, okay? But if you hand out bonuses under the table, guess what? You're not avoiding taxes. You're creating a payroll violation, and payroll penalties are some of the highest penalties in the IRS. Another thing that I see is people that are making these charitable donations, but you're not getting documentation, and you want your tax professional to write it off come tax time. So keep in mind, you must have a receipt. If there is a $250 or more donation, it needs to be in writing. Documentation has to clearly show what was donated, if it was non-cash, what was donated, and the fair market value. So when you're dropping off those bags of clothing and household items to Salvation Army, to his house, to wherever you're dropping them off to, if you don't get a receipt, you probably don't even want that deduction, okay? I'm just keeping it real. If you're going to give from the heart, of course, but keep your documentation tight. Lastly, ignoring IRS letters until January. Now, this one right here, this is one of the most expensive mistakes of the holiday season. I know people are busy, you're overwhelmed, you're traveling, all the things, right? And you're trying to stay in the holiday spirit because you know January is coming and it's just another year all over again. But when those IRS letters hit, please don't push them aside. When you get those letters, do not push them aside because penalties increase, interest increase. The type of collection or where you are in the IRS's collection process, it is advanced. So the IRS may move slow, but they move consistently. They don't care about no Christmas, no Hanukkah, no Kwanzaa. They don't care. They don't care that you want to travel, you're overwhelmed, you're busy. They don't. They don't care how stressed you are. They don't. So if a letter hits your mailbox, open it and deal with it, or get somebody to help you deal with it. Okay. If you want to go on vacation and not deal with it, send a letter to me. I can help you deal with it, but deal with it nonetheless. Okay. I want to give you finally a holiday tax rescue plan. This is what I feel that you can do right now to protect yourself from those January surprises. 6 simple steps. Step 1, review your bank statements, separate your personal spending and your business spending, okay? If you have a clean set of books, that's going to prevent chaos later on. You won't have no problems in January. Step number 2, run a quick year-end tax projection. Don't get a surprise come April 15th or March 15th when you prepare your tax return. Don't guess at it. Know where you stand just in case you need to put a little bit of that extra income that you made over the holidays. If you need to put some back for taxes, do so. Step number 3, pull your transcripts. You need to know, especially if you're in tax trouble, you need to know what the IRS thinks that you owe, not what you think that you owe. Step 4, contact your bookkeeper. If you don't have one, business owners, real estate investors, go find one. If you need recommendations, holla at a sister. I can help you find one. Y'all know I don't do bookkeeping, but I can find you a bookkeeper. I have colleagues across the country that'll do bookkeeping for you. Those holiday cookies can wait. Those holiday movies on Lifetime or whatever those TV channels are, they can wait. Clean financials cannot. You need to know where you are. This is how you stay out of tax trouble. Step 5, set aside a percentage of all that additional income. Even if it's just 20% right now, that will help at least soften the blow when it comes time to pay those taxes. And step number 6, respond to any of those IRS letters immediately. Don't go into 2026 with these old letters because guess what? New letters are coming. They're going to be more aggressive and the IRS is going to be a little nastier. Each letter they send you is a little nastier than the others. So that's all I have for you today, guys. Thank you so much for listening to another episode of Tax Problem Solved. If today's episode made you realize you might already be on the IRS's naughty list, let's go ahead and fix that. You can reach out to us at www.callthetaxpro.com. That's www.callthetaxpro.com. Don't wait until the new year. There are things that you can do. I just gave you a blueprint, 6 steps. Get them done. All right. Again, I'm Deltrease Hart-Anderson, keeping the IRS out of your pocketbooks, wallets, and bank accounts. Till next time, bye, y'all.